Today is Wednesday, May 4th. Happy Nerd Day, everybody. It's National Star Wars Day. May the 4th be with you. I'm going to look at the four horsemen today. These are my key sectors for the economy and for the stock market. When they're outperforming, that's a good thing. They're the usual suspects in a bull market. And when they're lagging the market, as they pretty much are now, that's not a good thing. Let's take a look starting with the XLF, the financials. You can see it came up to the trend line and stalled. I don't know if you call it a failure yet, but it did stall. Let's take a trend line from the bottom. So no breakdown just yet. Market hasn't opened yet this morning, and it is weak. So we'll see what happens there. But as of the close yesterday, no breakdown, and certainly not a move below the 50-day average. What's going on here? This is price relative, or relative performance, relative strength. You can see the index kind of had a double bottom here in its relative performance and rallied, but no breakout. Doesn't look like it broke through any trend that was coming down from the top there. So is this a double bottom breakout relative? Perhaps. We'll see what happens. But again, it's not a dire situation just yet, even though this is not reflecting the pre-market weakness. So far, so good. Okay, let's take a look at the next one, which is home building. You're looking at the ITB ETF. And you can see, again, came up to a trend line. It's not the greatest trend line because it doesn't describe the action here at all. But people look at it and it has some validity, and you can see that the rally did kind of end there. Now this trend line is very subjective. Is that the line, or perhaps down at the bottom? Doesn't really matter. It's pretty obvious that the rising trend is broken here. You can also probably draw a short line in the relative performance chart. So that is broken as well. So home building looks pretty weak, at least short term. So that's a negative for the market and for the economy. Moving on to retail. No trend line from the top as the other ones, or if you like, this one would have been broken. So you have a big congestion zone here below the 50-day average for the first time in a while, and clearly price relative performance heading to the downside. So not a good thing for retail. Tech, the big story last week, the XLK ETF, which is cap weighted and very much affected by the big stocks, hit resistance and failed. You can see a breakdown. Is that the trend line? Is that the trend line? You know, it doesn't really matter. You can see a big gap down right over there. It's down below the 50-day average again. It couldn't be more obvious in the relative performance chart. But the thing about this is that it was dominated by big caps like Microsoft and Google and Netflix and a couple other big ones that really had trouble last week. So what I like to do is look at the PSE index, the old Pacific Stock Exchange High Tech, now called NYSE ARCA. You can see that it did break through a trend line. So small caps, smaller tech stocks are doing okay, but not quite the same as the big ones. And now it's testing that breakout. So this is a big crossroads for the small cap, or the run-of-the-mill tech, I should say, with the big ones excluded. Definitely keep an eye on this one. But even so, look at the performance here. Not beating the market. So is this a small cap resurgence? We'll see. But not exactly encouraging overall. Okay, here we are with the BKX Bank Index. Used to be the bellwether index for banking. So I want to look at that just because it's such a big part of the financials and a lot of action in there with some of the bigger stocks making some moves. Not much to really look at here. The same trend line as the financials. A little shaky or more ragged type of rally here. And the same double bottom. But overall, nothing special with the banks, so I'll defer back to the financials. Let's just click on that. Defer back to the financials and see that trend line is now in danger, and we'll see if it breaks. So overall, my four horsemen sectors, it's financials, home building, retail, and tech. Not leading the market right now. Big breakdown in tech especially. So it's probably not a good thing, although it's not an instant sell signal right here because there are other sectors that have come back a little bit. So I'll have to keep an eye on it.